Good morning, Ron Janish here. Let's see, today is the 10th of March, and it is one heck of a day. Woke up today and found my internet connection not working, strangely enough. I have a cable service, so as a backup, what I have is I have something through Verizon, so I can effectively use their system for trading, and I can hook it up as a mobile hotspot. My little telephone here, which winds up costing a little bit, but um, it's an interesting option to consider that as a backup to your computer system, wherever you get your data from, that you look at the idea of using your telephone as a mobile hotspot. Okay. Anyway, here's what's going on. First, let's get rid of the trash. Uh, what I did this morning was I totally got out of this soybean position that I'd been in a while, went short up here somewhere, and just isn't working out. I'm out of there. Uh, let's take a look at the other stuff. What happened to the mouse? There we go. Still short this guy here, wound up going short up here. Sold a little more yesterday as it was up here. If this doesn't start working out, I'm going to step aside. Not all trades work out, as you know. Silver, well, silver's real easy, you know. You can see the pattern in here, beautiful for entering the market, and as you can see, when prices went down, they went down and had a correction. They closed past the ML, which they often do at the end of a correction, and then did their zoom up, retrace back, and then further in the original direction. Let's take a look at this. See, there we go. So, you know, to see silver go to new heights, up here somewhere, would probably be in the cards. So watch for silver to try to take out these highs up here. Okay. Then let's look at, well, here's IWM. Here's your 0.4, and here you can see it stopped up there, and you know, market's going where the market's going, which looks to me like it's not up. And the same thing with DIA. This is Dow Jones. And looks like we have a top pattern in here. If you take a look at your intraday stuff, you'll find that there's some interesting patterns in the YMH6. Okay, so you'll find it has an absolutely classic textbook top, and that's kind of neat. That's really important for using the course methods, because if you can find a pattern on the daily which tells you, hey, watch for an important reversal here, okay, which you obviously have here, and then a pattern on the intraday signals which tells you, hey, now is the time to get in. This means that you can lower your risk, right? So let's see what else is on. What else is on? Heating oil. As you may recall, when things were down here, I was looking for it to go up where it would be a good place to reverse. My thinking is the top is in and it's down we go for a while. We'll have to wait and see how accurate that is. Okay, as it went up, it took a while, but finally closed past the ML. Oh, not that one. You got to draw the right one. No, it was too weak, and that's interesting. Too weak to make it past the ML, so this would suggest a very strong down move to come, and we'll have to wait and see. Now, these are three Forex pairs, and if you look at them carefully, you'll see that they're really a standard wonderful opportunity for getting on the long side and just riding it for a very long time. Here, prices closed past the ML and then didn't make a lower close past it. Now it's up we go time. And here's the other one. Now, what's interesting about these three is they're three currency pairs with NOK as part of it. And why this is very interesting is, as we know, NOK is Norway. And while the Canadian dollar has been moving along with the crude oil in the same direction, this one would seem to suggest that there's a significant turn in here. So if Norway, who is really dependent on crude oil, is the signal, then it's up we go here for a while. And what does a while mean? Well, if you look at this, this is a weekly chart, and if you pop this over to a monthly, you'd have a mess. Okay, well, so much for the mess. Let's try EURNOK. Okay, well, so here's a monthly low. Okay, and the theory is this low here on the monthly would hold, and it's up we go to make new highs. Okay, so we'll see what happens. Basically, the part of the idea is it's kind of trade I can just put on and hang out there for a while, very long while. So a few months at least anyway, 2-3 months, something like that. So I don't really have to bother with it. Here's one that I just got in. Let's take a look at the daily on this. And as you can see, the hogs went and made new all-time highs. This is the June variety. Okay, and they went, well, not higher than back here, but higher than this section here. And so they're, in my mind, they're in a critical area where we could easily see an important reversal. Okay, and we'll just have to wait and see what happens, because if this area up here doesn't hold, then it's up a bunch more, which could happen. Now let's take a look. Where are we next? Here it says NASDAQ, and okay, this one. NZD. No, that's not NASDAQ. That's New Zealand dollar. Okay, that's NZD. Now we've been sitting on the shorts for this one for almost a week. See, we wound up going short on this day here, and those of you that are Andrew's course members watching this video can see why, and you can see the same thing in the other patterns that I noted, and this is absolutely textbook as a reason to enter on a short side. So yesterday there was some kind of announcement regarding what they're doing with the New Zealand dollar, and down she went very fast. So here's our ES. Just as near as I can tell, this is the end. Like this is a monthly high. So that whatever high this made this morning is, no, it wouldn't be this morning, it would be last week. Yeah, no, it would be this morning. Okay, so there it is this morning. That would be the end of the story, and it's down we go for a while. Okay. That's all I'm really looking at. I mean, Lord knows I have enough here. So looking at stocks having made a significant reversal point, that would show up on the weekly, on the monthly. Oh, here's what I wanted to say. Yeah. Now, you guys may recall that one of the things I did was, let's remove some lines. Yeah. Is I, back in December, is I called for this here to be the top. T-O-P, top. And so far it has been the top. Okay, very nice. Now, so what do we have here? Well, remember in good old Elliott wave theory, or in market psychology, what you have is you have a down move from the top, and then as prices go up again, you have this very strong inclination of the public to go, oh yeah, it's going to make new highs, everything's wonderful, yada yada yada. And my guess is this is what happened here. And I mentioned something like this in the video. So now here's the interesting thing that you got to notice. Okay, if this is a big old pivot to third wave down, okay, on a monthly or something like that, and this is obviously a daily chart, then this is a test of the highs, and it's down we go. And so this is the third wave of a third wave. And so somebody who winds up getting short here typically has stops above here, and then it's down we go time. And third waves are notorious for being fast and furious and nasty and all that kind of stuff. And something to watch for. Now, if this is a strong bear market down, this may keep going until September. Okay. Now, what's significant that you need to remember is that in a bear market, it's violent. Here, take a look at this. I mean, this is violent stuff, and it just gaps like crazy and comes up, and it does, when it comes up, it does very convincing up moves. Okay, so watch for these down like crazy and then jump up, and these violent up moves for people who have the right indicators and the right stomach for it wind up being wonderful selling opportunities in a bear market. So this is what's going on, folks. Let's just take a quick look at Andrews Pitchfork indicator. New Andrews. Here we go. Babson Trading. Okay, here's babsontrading.com, and we're on the we're on the prediction page. It says new tech, and this is why I posted this yesterday. Okay, so we had a 5 here, a 1 here, and a 2 up here, and then when we put the chart up, ironically, price is going to go up to where the number 2 is. And now this has nothing to do with Elliott wave or anything like that, even though it looks like it does sometimes. It's just suggesting the strength. So we had a 1 here. We're looking for, yeah, we're going to have an up move, but it's not going to be like, powerful. So, but it was strong enough, and then boom, down. Okay. So the theory is from here it's down we go, and if you click on this thing here where it says market predicting video, you get to see my rant back on December 7th, I think it was, back up here somewhere, saying, hey, it's down we go time. Okay. So there's that, and if you haven't taken the Andrews course, go to this page here where you have these 2 old guys on top and click on products and make sure you take the course. All right. And we're going to have a special live seminar coming up. So if you get a chance, come on out to probably be up at Big Bear. Beautiful place up in the mountains nearby. And we'll go from there. Anyway, thank you for your time and see you next time.